What's going on? This is SD Newkirk, your neighborhood loan officer. I'm here today with Chevonne. She's a real estate agent in the state of Florida. Chevonne, how about you tell us a little bit about yourself?
Hi everyone, my name is Chevonne Solomon. I'm your favorite Florida realtor and I am based in the state of Florida. I am with Home Life Realty and I am here for all of your real estate needs.
Yes, ma'am. How long have you been in the industry?
So I've been doing real estate for about 4 years, a lot of purchasing, but this is my first time being on the side of representing listings and buyers. So pretty exciting.
Cool. I heard you deal with a lot of investors.
Yes, investments are one of my number one clients.
Nice.
I help investors find properties for fix and flips, Airbnbs, and rentals.
Okay. How's that experience working out for you?
It's working really good. A lot of it is about networking and knowing your market and knowing, like, getting to know your investors personally and knowing what they need and what they're looking for. But yeah, it's going really good.
That's good to hear. Well, today we're going to talk about, is it better to rent or buy? So Chevonne, can you tell us a little bit about the flexibility of renting?
Yes, so the flexibility of renting. Renting offers flexibility if you're not ready to settle down in one place. It's a good thing for you to rent instead of buy until you figure out kind of where you want to be. Also with renting, you don't have to worry about maintenance. You don't have to worry about property taxes. You don't have to worry about those things that regular homeowners have to worry about when they acquire a mortgage. And it's a great option if you're kind of focusing on trying to build up your credit and get yourself in a financial position to purchase a home.
That's good. So what do you suggest more, renting or buying?
Like you said, it definitely depends. I think home ownership is something that everyone should acquire in this lifetime. It can build up, you can build equity in your home. It helps you with acquiring assets.
Yes.
It's very helpful with taxes. It's various reasons, but renting also is a good step if you're still trying to figure out, like, kind of what you want to do, where you want to be. People change jobs, they change locations, they may move somewhere and they like it, and then, you know, they want to try something else. So it's really about what you're looking for and what best option.
Would you recommend buying a home to someone that only rents for a year, then like to move around?
No. If they are renting for a year and I know that they kind of like to move around, I would definitely suggest that they at least do a short term, like a 6-month lease or a year lease, and wherever it is that they're going, just to make sure that's where they want to be. Because when you buy a house, selling it, especially in the first 2 years, can, you know, not be as feasible of just renting and just figuring out where you want to be.
Understand. So with that being said, owning a home, you said something about equity. Having that equity in your property could give you multiple abilities to, you know, finance another investment property, or use the money for your child's college education, or to buy a new car, numerous things. Do you have any other suggestions what equity could be used for?
To become a investor and buy another property and let that property pay the mortgage, and also possibly put money in your pocket depending on how much equity you have. So there's a lot of various things you can do with your equity, but I will always say the best thing to do is to use it to make more money for you. That is the ultimate goal.
Yes.
You know, we're trying to build generational wealth, so it would be great to, like, kind of pay off bills or, you know, do some improvements in the home, because that will bring more equity. But if you're going to use it, make sure it's making money for you.
Indeed. So, you know, what it boils down to, if you're renting a home, if you're renting an apartment or a house for a year, and you move around and, you know, you're renting another place for a year, then renting may be for you. But if you're staying in your property for over 5 years, then buying a property may be the better option, so you can build that equity. Because what you have to understand is that what you're doing is taking that money that you're giving to your landlord or to the owners of that apartment complex, and you're investing into their equity, investing into their future instead of yours. So anything else you suggest for buyers that's looking to buy here soon rather than renting? Any financial plans they should be making?
I feel like home ownership is it's a good way to build long-time wealth. And if you can understand the real estate market as it grows and changes, when you do own a home, equity can increase quite rapidly. You
Yes.
know what I mean?
Yes.
There was a big boom in Florida. And speaking from experience, I bought a home for about $475,000. When I sold it about 5 years later, it was $800,000.
Oh, wow.
Yeah.
Wow.
So it doesn't usually boom that fast.
Yes.
But it definitely can, and it can be a way for you to acquire long-term wealth.
Yes. So it's all about timing in a way.
Yes, timing and knowing the market.
Yes, in the market. But you can't always depend on I'm going to wait. You can't be the buyer and say, hey, I'm going to wait for the interest rates to be low,
Right.
3-4%.
Right.
You have to get in when you have the funds. So if the interest rate are even 8% and you have the money to go ahead and invest into your own property, go ahead and do so, because at some point the interest rates will decrease.
Yes.
And that will be your opportunity to refinance. And being that we're speaking on equity, it's always good to go with the shorter term, like a 15-year term, because you build your equity a little faster. They also have terms such as 20 years, and now they have a 25-year term if you decide not to go with 30.
Yes.
But if you are the type of person that prefer to go with 30, you can take and invest a little bit more. So say if your mortgage payment is $2,000, you could take and put another extra $100 or $200 into your mortgage payment, and that will shorten the term of your mortgage and also decrease the interest that you pay out on your mortgage. What do you think about that, Chevonne?
That is a great point. He's absolutely right. And when he says not to wait on the interest rate, just to elaborate a little bit, I have had clients that was like, I want to wait. I want to see if the interest rate comes down. And guess what? That house that they loved so much that was affordable and in their price range, the equity went up and they could no longer afford it.
Yes.
So it's easier for you to refinance than to acquire the funds or the financial income to afford a house. So if you find the house of your dreams and you're like, the interest rate is kind of high, get it, because you can always refinance and bring your interest rate down. But if that equity in that home goes up, if that neighborhood booms, it's no longer in your price range, and now you're looking for another house. And the quality of the home that you're looking for, that what you can afford now, might be completely different than what you found.
You're right about that.
When you get your house, when you find it,
So
get
Chevonne,
it.
can you tell us the financial factors to consider when between renting and buying?
So some financial factors you should consider is when you rent, pretty much all of those maintenance fees, usually all of those things are collectively together, and a little bit cheaper than when you have a mortgage. When you have a mortgage, you have property tax, you are responsible for your own maintenance if it's not under warranty, and your insurance. So those things vary. Insurance for a rental property is a lot cheaper than insurance for a mortgage, but it's only because more things are being covered. So besides payment, because a lot of people look at, well, I'm paying, $2,500 for rent. I can just get something that's $2,500.
Exactly.
Yes, you can. However, you do have to consider the other things that homeowners have to deal with that renters don't.
Exactly. So, for example, your rent payment may be $2,000, and you may be qualified for a mortgage payment that is also $2,000. But then you have to factor in your insurance and taxes, which in the previous video I covered escrow. So when you're dealing with escrow, your taxes and insurance could be either added into your mortgage, or you could cover it on your own and pay it separately. But that is something to consider. And the one other big thing to consider as well with owning a home is, do your house have HOA? Can you tell us a little bit more how HOA works?
So HOA is a homeowners association, and what that is that you're going to be paying for your homeowners association, and that's going to cover things within the community. So usually like clubhouses, pools, street cleanup, things of that nature. They cover those things. So there's some maintenance and some things that you won't have to do on your property, but they also make sure that you stay on top of your own individual property. Some HOAs, you have to get a lot of things approved, like what kind of gates you want, the color of the house. It can be very detailed and intricate, but for the most part, HOA is there to make sure that the community stays beautiful, up to par. Okay,
so if you're free range with your home, you might not want HOA. If you like to color your house different colors, like and do your yard different things, keep your car parked in your grass, HOA may not be for you.
It's not. In addition to HOA, some new communities also have CDD, which
what is CDD?
So CDD is when the builder kind of leases the property, and they pay that back in increments, but it will affect the homeowner as well, because those CDD payments can increase, giving if they expand, if the community grows. Those fees aren't usually set. They kind of change with your property taxes. So that's something else that if you have a mortgage, your principal and interest stays the same, but your taxes, your insurance, your HOA, your CDD, those
It's subject to change.
Those are subject to change.
Yes,
so,
indeed. Especially out here in Florida.
Yes,
Yeah.
absolutely.
Yes.
So those are other things that you need to consider when you're looking for your home or what community you want to be in.
Indeed. So one thing to also consider is your credit score, income stability. What do you think about that? Because right now we're coming across a lot of clients. Their credit may be good, but their DTI is high, or they may have a low DTI and very low credit score.
Yes.
So
how I like to explain credit to people in debt to income ratio, because a lot of people don't understand. Pretty much in gym form is really how much you can lift, right? So the bar.
Yes.
You doing bench presses. The bar is your credit score, right?
Yes.
Okay, and each side you have your income, and then you have your debt to income ratio.
Okay.
A lot of people think because their income is very, very high, they can afford any house that they want. Like, I make $250,000, I make $300,000. Yes, but you have like $200,000 in loans and other things that you are paying for. So that changes how much you are able to carry, because the banks, of course, want their money back.
So you're all right about that.
Yeah, they're gonna do their due diligence to make sure that they're only lending you what they feel like you can afford with your current credit situation. So to those people, I would say before you start your mortgage journey process, if you're making that much, let's start paying down.
What about people that don't have, the substantial income to make those easily pay off debt? What would you suggest to them?
I would say a financial advisor is good. I know a lot of people, a lot of banking have financial advisors as a part of you having a checking or savings account. So you can definitely reach out to them and help them get you on a goal or a budget. But I would say tackle what you can with the highest interest rate, moving down. Tackle as much as you can, get that down as much as you can, because again, if you are bringing home $5,000 a month, but your car payment is $1,000, and then you got credit cards, you got this, and the only net money you have after paying bills is like $1,000. That's going to limit what you are able to, afford. Because even though on paper you look great, you look like a great candidate, once that debt to income ratio comes in and they see that you only have $1,000 left each month, the bank is going to consider that, and you may get qualified for a lower loan, or they may ask you to pay down some of that debt first.
That is correct. I have seen people come across the table with the money, but they have multiple car loans, they have multiple credit cards, multiple investment properties. And even with investment properties, it's important that at the time of buying or purchasing a new home, that you file your taxes correctly. I understand that some people do like to do a lot of write-offs and on their investment properties for any type of repairs and stuff like that. But if you're planning on buying a new home, make sure you claim as much as possible as far as earned income.
When I am speaking to a client, because as a real estate agent, you'll meet clients and then you won't work with them until like 2 or 3 years later. When we meet you, our job is to get you with someone that knows credit and knows loans, and kind of work with getting you exactly what you need. So sometimes I have to advise clients, especially clients that have multiple businesses and they do a lot of write-offs, that for the next 2 years that you're filing taxes, we're going to ease up on the write-offs. I know you might have to pay more, but that will help you get what you're looking for specifically, because your taxes are going to be pulled 2 years, if I'm not mistaken.
That is correct.
Are going to be pulled, and that's going to be a consideration of your income as well.
Yes.
So,
and being that you work with a lot of investors, you probably come across that quite often.
Yes.
Where they say they make so much on rental,
Yes.
but they don't
Yes.
rent off so much, and you know.
So people, I do with a lot of investors that are just starting out, because I love to work with people that are just starting out in the investment world. But my seasoned investors, I don't have that issue.
Yes.
They use private money lending,
Okay,
so
gotcha.
they use like hard money. So it's a little bit simpler for them. But for people just starting out, yes, your taxes are going to be a part of how you get qualified.
Okay.
But as you get better and you network a little bit more,
Yes.
and you can transition into private money lending, it's less requirements because you've set up a work relationship with that lender.
Yes.
And you'll be able to acquire more things once you get in the game and kind of know what you're doing like a little bit more.
Understood.
But if you're starting off with just like a conventional loan for like real estate investments, yes, those taxes and that income is very, very important.
Okay, cool. Now, she did mention hard money loans. Just to let you know, hard money loan is a short-term loan, usually generally between about 6 months to a year. Interest rates are very high.
Yes.
So, you know, it's something for investors, experienced investors, because I have seen unexperienced investors get a hard money loan, then they turn around and get and try to refinance or get a regular loan to cover that hard money loan because they're unable to pay it back within the time frame.
Yeah.
So it's good for experienced investors, but not for the new investor unless you have a plan. You have to have a plan. So, you know, consult with, a financial advisor to make sure you have that aligned. Again, it's good to always invest into yourself. You know, even if you choose to rent, just save up your money so you can put yourself in a position to buy at some point. Renting is good if you're the type to move around quite often and not really in the mood to really settle down into one location. But, you know, if you're looking to stay there for a few years, want to put that money into your own pocket. You know, we're working with, this is one of the top real estate agents out here in Florida. And, you know, if you're in your house at a certain point, you're like, hey, man, I want to sell. I want to move around. Hey, you know, you got her to give her a call. You know, Chevonne, hey, do you have any social medias that you'd like to share?
So I am on Instagram. I'm on Facebook. And you can find me at Chevonne Solomon Realtor on both platforms. That's CHEVONNE. SOLOMONREALTOR. So, Chevonne Solomon.
Sounds good. Well, again, this is the Newkirk Neighborhood MLO. Hey, we'll see you soon.
Take care, guys.